This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn Forex Report.
Good afternoon, traders. Scott Norris here with your Forex Report. Today is Thursday, August 14th, 2008. We got off to another quiet start today as pairs such as the euro dollar and others continued to trade in small channels. Overnight numbers from Europe showed a contracting German economy, while elevated inflation persisted in the eurozone. U.S. data was also a little on the disappointing side, with weekly jobless claims remaining at 450,000 and inflation soaring the most in 17 years. Remember, in today's slowing economic environment, hot inflation numbers are definitely not a good thing. Even if it means higher interest rates, the economy will ultimately suffer as purchasing power for Americans declines. The bottom line in the fundamentals is that most major economies are struggling right now. The fact that the U.S. is not alone in this boat anymore is the primary reason we have seen the buck surge this month. Knowing this is the primary catalyst also keeps us cautious about forecasting too much more strength in the dollar right now. The dollar did end up rallying this afternoon, likely the result of oil and gold selling off. We think there might just be a little left before a correction against the buck is seen. On the technical front, we are watching for key resistance areas on the dollar using Fibonacci retracement and extension tools. The pair has already played into very stiff resistance on the dollar yen and pound dollar, while the euro dollar and dollar Swiss have a touch more to go. These critical levels being approached now couldn't coincide better with oil and gold nearing big support. Gold is now around $810 an ounce, with $800 serving as big technical and psychological support. Meanwhile, oil is just above $110 a barrel, which could be a big hurdle for bears to jump. The inverse relationship between these commodities and the dollar is still a very strong one. Therefore, a big bounce in commodities should send the greenback down at a decent pace. We are still of the belief that more gains will be seen after such a correction is experienced, but we will not fight the dollar bears if the tone suddenly changes to bearish in the short term. Till tomorrow, have a wonderful night trading. Take care.